contrarian and a fundamentalist, but also a sensible investor. You're not looking for stratospheric returns because you
Well,
think
we're always looking for those 10 baggers, but bear in mind, we've already taken our money off the table when they double.
no, my point is you need to know when to get out.
Yeah, you can't be greedy. Markets are driven by three emotions, and my goal, is to always trade without emotion. So markets are driven by fear, panic, and greed. So let's take greed first. When markets go up, people get greedy. They fear that they're going to miss the next big thing. So they hold on too long. They don't employ a philosophy. Hey, I got my profits. Let's take our money off the table. They fear that they're going to miss out on the next big thing. When that stock or financial instrument starts going down the other side in the parabolic fall, they panic and they sell at the bottom. So those three emotions, greed and panic, both have a commonality, and that's fear. So you need to learn to control your emotions and do not trade with emotion. If you start to fear, either on the panic side or the greed side, you need to step back, sleep on it overnight, and then come back tomorrow with a non-emotional, fundamental decision on, is it time to exit this stock or this financial instrument or this commodity? Or is it time to put more money in? Or is it time to sit on the sidelines and wait? And there's strong fundamental reasons to do one of all three of those.
I think we're starting to learn a little bit more about your philosophy, which is fascinating. And I say you've been in it a while, so you've seen all sorts. You doubled your money last year and the year before. What's your secret? How would you sum that up?
I got 30 years of it as a field geologist and another 10 as an analyst and talking head. So I understand commodity markets. I understand the way the junior business behaves. We don't always make the right decisions. I own about 30 junior stocks right now, but I only cover 2 companies. So what we do in the newsletter is try to pick the no-brainers. I have lots of stocks in my portfolio right now that are underwater. I do not trade stocks that I've lost money on until it's time to take losses during tax loss season. So I haven't paid capital gains in the US for something on the order of 7 or 8 years because I've had losses and I can wipe out my profits by taking tax losses. The other thing we do quite commonly, we did this in late November and December, is when people are selling off good companies during tax loss season, we go in and we buy them. And we buy them in mid-December and we flip them the first week of January, and we make 25 to 40% on our money. We did that quite successfully again this year. Those sorts of trades, I talk about the philosophy of it, but I do not give specific examples of companies. So I can tell you a couple of companies that we did that successfully, but I don't give people advice in the market. I tell them what I'm doing, and the idea of tax loss buying has been very successful trading philosophy for us also, and that has nothing to do with the stock picks and the power of 2 trading philosophy. Just another example, ways to make money in this business.